Welcome back, watching Traders Corner, and as always, joining me in studio is Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Hi, Juliet.
Garth, it's customary for us to start off with the S&P 500, and we're getting quite blasé about records because it just seems to be unstoppable at this point.
It is. It just keeps going up and up. Every night we seem to be going further and further into record all-time high territory. You can see certainly over the last week or so, the market really has put on the gas in a big way, and it's been up every night quite aggressively. We did identify this a little while back where we said we had what was almost like an ascending triangle type of structure here on the S&P 500. The resistance level that we had to monitor was 2280, and it broke out above that, and it came back and gave a nice retest of the breakout, and ever since then it's just been pushing higher and higher every day. It's very overbought now. You can see your relative strength index at the top there is now giving a reading of 77, which is very, very overbought for an RSI to give a reading that high.
I mean, 70 is considered overbought.
Above 70 is considered overbought. So it's unusual to see it going so high. Look, it did briefly go there in December last year as well. But you can see then that actually marked the start of a period of consolidation that lasted about 6 weeks. So one would think that at this level, the air is getting pretty thin up here for the S&P 500, and one would think that being overbought as it is, you would probably expect some sort of consolidation to begin at any time soon.
Yeah, well, yeah, you might expect it. When that's going to happen is anyone's guess.
Yeah.
Garth, what about our own markets? Because Monday was a fairly good day, but having said that, you know, we seem to go one step forward, one step back. We're not really advancing at any great rate.
No, that's it. So we've spoken about this head and shoulders pattern that's evident on the top 40 previously, and there you can see it quite clearly. There's the shoulder on the left, the head in the middle, and then the right shoulder. The break below that neckline, which was at about 45,700, that break to the downside validated the head and shoulders structure, and it points to a target projection down here at about 44,500. Now, you can see we haven't got to that target level yet, and last week I did question whether this head and shoulders was still valid or not. But in reality, whilst the market is still below the bottom, below the top of that right shoulder structure, the head and shoulders pattern is actually still valid. So the lower target can still be argued for. I haven't drawn it in here, but what I also see potentially here is a bit of a bear flag pattern that has unfolded over the last week and a half or so. And the move lower that we've seen now in the past couple of days does also validate that bear flag structure, which also gives a lower target projection, more or less to the same area of 44,500. So I think for the time being, it does still look to me as if we might actually go and see that target. And I do think, if nothing else, I think we do need to just at least visit the 50-day moving average, which is that red line over there, because that tends to be like a magnet for the market. And we always see it in the past. If it's rallying like it did back in November and December, there you can see how it tags the 50-day moving average. And now on the way back down, I would expect we probably also do need to tag the 50-day moving average before we can then try and choose another direction from there on.
And presumably they will take direction to some extent from US markets, but I guess they've also got to head somewhere.
Yep.
Garth, let's talk about the two trades that you enacted for the portfolio last week. They were both long positions, and the first was, and they were both on the offshore portfolio.
Yes.
The first being BHP Billiton.
That's right. Yeah. So we went long of BHP Billiton last week, and this is a stock that we had flagged in the previous week, said to watch out for in the week ahead, and it all worked out quite nicely according to plan. So there you can see about a year's worth of trading action for BHP Billiton, and what I'd identified was the fact that we had this very steady upward trend that started in January 2016, and you notice how it joined all the low points on the way up throughout that upward trend. And it pulled back to just above £13 per share. And I said at that point that that was very strong upward uptrend support. And the likelihood was that we would see some buying interest come into the stock at that point. Now, if we zoom in on that boxed area over there and just bring it closer for the viewers to see, you can see quite clearly there's the upward trend that we had identified. That's the one-year upward trend. And we had this beautiful reversal pattern off of that upward trend. I took that as our signal to go long. So the following day, I then put a long trade on, and I went long and bought at £13.60 for our portfolio. The stop loss is £13.15. So in other words, looking for the stop loss to be below the lowest point of that reversal candle that we saw on the upward trend there. And I'm looking for a move up to about £15 here, which effectively is the previous target, is the previous high rather, that we saw in January of this year. So you can see on the right-hand side there, the risk to reward ratio is plotted with that red and green block. The red block obviously being a lot smaller than the green block, which is how you want it. You want your risk to always be a lot smaller than your potential reward.
Yeah.
A good risk-to-reward ratio is very important. So as it stands now, we are on the right side of this trade. It is making us some money. So we're going to stick with it for the moment.
And sticking with it also implies, or does it imply costs? Because it's a CFD position, and perhaps you could explain whether the costs are different on trading UK CFDs as to South African CFDs.
Yes, well, where it does differ is in the sense that your financing costs differ, because in South Africa, we obviously have higher interest rates here than what you have in the UK. And your funding rate on a UK CFD is at the equivalent UK rate. So it's much, much lower rate than what we're charging here in South Africa for our CFDs locally. And that's purely a function of the different interest rates in the different geographies. I was asked this question by a client during the week, and I thought it was interesting to bring up on the show this week because it's actually a very valid question. You can trade BHP Billiton here in South Africa, or you can trade it on the offshore market in London. And
so does it actually make it cheaper to trade offshore?
Well, effectively, it does, because your financing cost is lower on the offshore CFDs, and by quite a few percentage points, actually. So from that point of view, if you are going to be holding a CFD position for any length of time, you'll find that your financing cost element it's a lot lower in the UK than what it is here.
Is there another factor, just to quickly wrap this up, to worry about, though, is that the rand? Because is that going to influence, if there is a sharp weakening in the currency, does that then negate the low financing costs that you have on sort of offshore derivatives?
Well, in this case, a sharp weakening in the currency would actually be helpful for the trade if you had it in South Africa, because a weaker rand is typically a positive driver for BHP Billiton.
Yeah.
So it would actually help the share price higher. So I don't think you can really, not in the short term, I don't think you can link the currency and the interest rate differentials together, but obviously long term there are economic links.
Okay, so something to think about. So you're still in the trade, and you're also still in the trade on Weir Group, which is an engineering firm that you bought into last week.
Yes, that's right. So Weir Group was a pretty strong looking chart structure. You can see that very well defined upward trend that's been in place also for the past year on this stock. And if I zoom in again, what you can see quite evident here is that this stock had also pulled back to its longer term upward trend and reversed up off that level. What got me interested particularly last week was the fact that this share price had actually been trading in a sideways channel. It had then broken down below the bottom of that channel, gone and flushed through the 50-day moving average there, reached the upward trend support, and then reversed back up into the range quite violently. And typically when you see a scenario like that unfold, what very often happens is you'll find that the stock's price will actually break out in the opposite end, to the opposite side of the range. So what I was looking for here is actually a break above the top of this range boundary, above £20.50, looking to sell into a move towards about £21. Now, it did get off to a great start for us, and it was looking good for a number of days of last week. Unfortunately, on Friday, it came off quite sharply, and it's come all the way back, and today it's been trading close to our entry price again. So the stop loss hasn't been violated, so we're still in the trade, but it is a little bit disappointing to see that very sudden sharp sell-off on Friday after it had been looking pretty good for the couple of days in the week before that. But we'll give it some more time and see. Again, on the right-hand side, you can see the risk-to-reward ratio indicated by the red block and the green block. And we'll stick with it. If the stop-loss gets breached, then that's one of those things. But I think in this case, I'd like to give it a bit more time and see whether we can see this trade working out still.
Okay, so 2 long positions in which you remain. Yeah. Last week, you also flagged the rand-dollar exchange rate. And it has been very strong. In fact, it broke below 13, although I think news of Brian Malefe's possible appointment to Parliament shook currency traders somewhat on Friday. But is this a trade that you would be entering into? Well,
we're not entering into a trade. I just really wanted to bring it up again because we had spoken about it in previous show. And I said at that stage, watch this market. This currency does look as if it's got the propensity to still go stronger. And we had identified that this 13 Rand 20 level on the rand-dollar exchange rate was a very important level. And you can see how the currency had tested that level on several occasions since August of last year. And the point that I made previously was that we had this pattern of falling highs. and along with this flat support area, 13 Rand 20. And when you see a scenario like that, invariably it will break to the flat side. And what it was effectively saying to you is that every time the Rand weakens, it's not weakening to a new weaker level, if you want. It's not
strengthening. You mean?
Yeah.
Well,
it had a strengthening tone to it.
Yeah.
It wasn't making new lows. It was making it was gradually getting stronger. And the suggestion that I made was that it looked as if this technical setup would probably resolve to the downside, i.e. that the Rand would get stronger.
Yeah.
And that would mean a move below 13 Rand 20. Now we've seen that. It traded down to around about, I think I saw it last week at about 12 Rand 90, I think, at one stage. And as we sit right now, it still is below the 13 Rand 20 to the dollar level. So from a technical standpoint, that does potentially still point to the Rand going stronger in the near term. What I would say is that just monitor this downward trend that I'm pointing out there with my mouse at the moment, because that comes in at about 13 Rand 50. If we see the Rand breaking up above 13 Rand 50 and weakening through that level, then I would think that the chances are that might have been a false break to the downside. But we can't speculate right now and say whether that will happen or not. I think it's just something to be aware of. As I sit here right now and I look at that chart, I would say to you that I think the bias is still for the Rand to probably go stronger, and we could even see it going down towards 12 Rand 50. But like you said, there's political influences at play which might turn this whole thing on its head. But from a pure technical perspective, the Rand looks like it's poised to go stronger now.
And then, of course, there's the national budget on Wednesday,
Yes.
and so that might introduce an element of uncertainty.
Correct, yeah.
Garth, to sort of end off, something to watch, and so it's a flag to next week's show,
Yeah.
and you want to have a look at the S&P 500, and I mean the question is when, if ever, is this going to retrace, and how to take advantage of it? Yes,
well that's it. So I'm going to be away for next week's show. We'll be pre-recording a show where I'm going to discuss an interesting structure that I've done on the S&P 500, where I've gone short on the S&P 500 because I do think it's gone stratospheric, and it probably is due to come off a little bit at some stage. However, I'm not silly enough just to short it blindly. So I've created a nice, interesting hedged structure, which allows me to be short, but if the market continues to power up into the stratosphere, I'm not going to lose a lot of money. So that's kind of a sneak peek into what we're going to talk about next week. You can see the payoff on a structure on the right-hand side over there, and we'll go into the details of it on next week's show.
Okay, so what does the portfolio look like?
Right, we still remember we've got two components to our portfolio. So we've got the Rand portfolio, which is still sitting slightly underwater. We're down 1.1% there. We haven't done much trading on that portfolio lately. Then the offshore portion of the portfolio is where we have been far more active, and we've done these recent trades. You can see the BHP Billiton over there that we discussed today, and the Weir group. So we are up 2.8% on our London portfolio. Remember, we start there with £10,000. We're up £284. So it's looking okay at this stage, and obviously we're still in those two trades on BHP Billiton and Weir Group.
I mean, did you always expect that maybe it would be more action taking place on your offshore portfolio this year?
No, I mean, I want to try and balance it between the two, but it just kind of worked out that way, that we've spotted a few more interesting opportunities to discuss on the offshore portfolio so far. But I don't want this to become just about the offshore portfolio. We need to balance the local and the offshore components quite evenly, I believe.
Yeah. Garth, and then just to end off, a reminder that people can subscribe to a weekly alert.
Yes, that's right. So if you go to traderscorner.co.za, you go to the middle of the page and you'll see there's a link there to a free weekly email. If you subscribe to that, it's very quick and simple. We'll send you an email every Tuesday at lunchtime where we detail what's coming up on the show for that week. Basically give the viewers a little bit of a heads up in terms of what trades we'll be doing for the week ahead.
Great. We'll leave it there. Garth, thanks as always for joining us. Garth McKenzie is founder and editor of Traders Corner.